Hello, ladies and gentlemen. I am O'Brien McMahon, and this is People Business. In this episode, I am joined by Sri Kaza. Sri is an author and business strategist who helps small businesses compete against bigger competitors. He's the author of Unconventional, a small business strategy guide, and creator of the Underdog Principles Framework, a strategic approach built on positioning, proximity, and purpose. A former McKinsey consultant and CEO, Sri's work focuses on helping independent businesses find their competitive edge through authentic storytelling and strategic differentiation. And as mentioned in that little bio, it is positioning, proximity, and purpose that he has seen make a huge difference for smaller businesses when they are trying to compete with their larger competitors. And we talk in this conversation about how individuals, small businesses, even just small teams within larger organizations can really lean into those 3 Ps to stand out, to grow, to make a difference, and to build a better business. Whether you are a small business or not, these lessons apply. As I've said ad nauseum on this show, it's all about distilling down truths that can be applied everywhere across any type of business or any type of human interaction. And this is definitely one of those conversations. So I know there's something in here that you can take away and apply to yourself or your business. I hope you enjoy the conversation as much as I did. Here is Sri Kaza. Sri, welcome to the show. I'm really excited for this conversation. I mean, I'm excited for all conversations. It's not like I do a podcast and invite on guests I'm not excited for, but I am excited for this one as well. I think your angle, 1, your background, and then 2, your angle on small business differentiators is really interesting. And for those who are listening, who are like, I'm not running a small business, so I'm going to tune this out right now. Hold on a second. I think there's a lot of good stuff in here that's just really good business perspective and strategy. So I'm interested to tease this apart today. So welcome.
Thanks for having me on. Appreciate the chance to talk about stuff that I find interesting too.
Yeah. You're a big company guy. You're a McKinsey consultant, Fortune 500 world, and you wound up writing a book on small business strategy. So could you connect A to Z there?
Yeah, it's interesting because I had never really intended to be involved in small businesses. I had done a lot of tech work at McKinsey. My specialty was working with companies that spend billions of dollars. Yeah, I'm surprised I found myself here as well. It wasn't an intentional path. McKinsey's a great company. I got a chance to work with lots of big firms, companies that spend billions of dollars on capital investments just to continue to grow. My specialties were in the tech space more than anything else. But after leaving to go be an executive, I got a taste for entrepreneurship myself at a very entrepreneurial company, and then went on to join another entrepreneur leading a business that was focused on helping small businesses. This company was a tax credit co. and it was helping smaller businesses capture tax credits that usually they're designed for the small guys, but only the big companies can get through because they're complicated and very government oriented. So in the case of Tax Credit Co., what I found was we had to actually get really close to the small business owners, understand their problems, and take as much friction away as possible. And in my journey in dealing with them, first of all, I was very inspired. These folks do everything from, yes, they're the CEOs and owners of their companies, but they're also the heads of HR. They're also the janitor, right? They're everything. And in these really small businesses, anything you can do to solve the problem that they care about without them having to put a lot more energy towards it, there's an opportunity to help them. I got to learn that. We exited that company. I joined a different one to scale up and sell again into small businesses. This time it was a lender. The company's called O'Brien when I joined it. I learned the same lessons. I brought some lessons I had from before into really solving their business problem through my product. And what I learned in that journey actually was less about the growing and more about dealing with adversity. So we hit COVID right as we were peaking and getting ready to do a really big exit in the year 2020, but then COVID hit, shut down many of the businesses that were supposed to be paying us back. And that put us under a huge amount of financial stress. But one of the things that we chose to do was put those small businesses ahead of us. And instead of trying to collect, we tried to extend their runways and give them more time and work with them to give whatever other support was available. Because our options were, hey, go collect as much as we can, pack up the business, get the shareholders back some money and move on, or, hey, keep these guys alive. Hopefully that effort means that they survive and they can actually pay us back. And we maybe have a customer base to work from again when things get better.
Yeah. And all of the businesses exist at the end.
Right? So I walk into a board meeting with this strategy of, hey guys, let's actually let the company default. Let's actually let our creditors freak out and get pissed. Let's let all these bad things happen to us as owners, shareholders, and creditors. Because if we give the businesses that we're supposed to be helping a chance, then there's a better chance for us too on the other end. And I couldn't believe how actually I had the whole board support it. It was unanimous. And I hadn't really expected that because as a McKinsey partner, if I walked into a public board saying, hey, let's put the company at risk, possibly it'll go under. And instead of getting 70 cents on the dollar, all of our shareholders might get 40 cents or 20 cents on the dollar, I would have been fired on the spot. But in a smaller business where you've got a group of people who actually cared about the mission, which was to help small businesses, it was really amazing to get that and say, hey, well, let's do the right thing first. And then expect that if you do the right thing, a business will follow. Mm-hmm. That was a big leap of faith and it was a tough time. And so I was moved by it. And we did survive. We did actually get PPP lending out to a lot of these small businesses. There's a lot of issues with the government program and it was being designed for bigger businesses. So you see all these $10 million checks getting written right away and the money runs out before anybody even knocked on the doors of the guys who only wanted 50,000 or 10,000. So there were issues, but we stood by everybody we could. Not everybody survived still. But when we came back out of it, we had a lot of very loyal and grateful customers. And what would move me more was the ones that survived. So I did a lot of outreach to them, checked in on them, trying to figure out like, hey, what did you do differently? And brought my kind of analytical perspective, this hat of, oh, you know what? Somebody who followed the right strategies and methods would have survived. And people who were going by gut probably didn't make it. And I found something that felt initially very different from my hypothesis and talking to people looking at I had all this data. We were fintech, so we knew all of their finances, their strategies, all this stuff was available to me. But I got scatter plots that looked like Rorschach tests when you say, hey, does success correlate with anything? But then when you talk to these business owners, they may have pursued something that looked unconventional, but really they were staying true to some of their principles that made them successful to begin with. And story after story, what you'd hear is that their customers rallied behind them and put in the effort to keep them alive because the customers valued them. And this only happens when you have, one, something unique and almost irreplaceable. Two, there's some level of intimacy between the ownership and the customer. And then three, that they have a shared vision of what this company should be around for. Like, why is it even here? So when I dig into it, I can reverse those concepts and said, look, this is really about three principles that they lean on. The first one is positioning. Right? What is your differentiation? You have to be unique. It doesn't have to be unique in some unicorn startup way. You just have to be unique in that you do certain things a certain way. You serve one certain set of people a certain way, but you have to be unique because if there's another one like you who's offering the same kinds of things, then nobody's worried about just you surviving. They've got other options. You've got to have this proximity, which is you need to know your customers really well. You have to be close enough to them to empathize with them and use that empathy in your decision-making. If you ignore how they feel your decision-making, they won't be with you when they get to make the decision, do you survive or not? And then the last one was purpose. And so purpose is an interesting one because a lot of people think purpose might mean saving the world or like going green or something big and world-changing. And it doesn't have to be. It has to be at least something different than pure profitability. If the purpose is as simple as saying, hey, look, I left my job to go be an independent consultant or to go and start my own restaurant because I wanted a little bit more control over my life, which, by the way, never the right choice, but you're not going to get control over your life if you start a restaurant. But if you made these decisions and the purpose is for that freedom that you were pursuing, that's purpose. But knowing that and being true to it is really what gives you the freedom to run the business, to keep it running, keep it going. And your customers actually respect that. And if it's creating community, if it's taking care of your family, if it is, yes, changing the world or saving the environment, any number of things, right? If your customers can see that same purpose or agree with that same purpose, those are those three principles that have kept a lot of those small businesses not just operating, but thriving, and with customers that are fiercely loyal to come in and save.
Yeah. I love those observations. And I think, like a lot of things, I think they apply to larger businesses if you think about them the right way.
Oh.
But let's unpack those a little bit. You mentioned your positioning doesn't need to be super unique. You don't need to be innovating in a way that nobody's ever innovated before. What's a minimum threshold for making something unique?
I like to think about it as, and I use a really big company example in my book about the landfills that I worked with. And you've got a landfill on the east side of town and you've got a landfill on the west side of town. And both of them are unique because one is much closer to its customers than the other guy's customers. And then the same thing goes. Guys on the west side of town are much closer to the west side customers than the east. So you're offering something much better to at least some group of consumers or businesses or partners. And you have to embrace why they come to you. You have to maybe facilitate that and craft it, but it doesn't have to be, hey, you know what, we're the one place that can handle this type of waste or that type of waste or whatever. It's go embrace what you have and why you're there. So if you're the best pizza place in town, even though your pizza is identical to the same pizza place 2 towns over, you're still the best one in this town, right? Embrace that, invest in that, protect it. Minimum differentiation is really what makes you just better than the rest to the customers that you're going after. And if you're small, it's easier to be very local and very focused. And the larger you are, the more scale you want to have. That principle doesn't go away, actually, right? It's just harder to go after.
Yeah.
With scale, that means you got to be unique and special and different to everybody you're trying to reach.
Yeah. I was listening to another podcast the other day, and in the interview, they were talking about how the internet, everybody thought that the internet was going to make everything super niche. And so it was going to break everything down into small businesses because you could target the African-American mothers in these areas who like knitting and something else, whatever, in this type of food. Like you could get super niche and specific.
Yeah.
But what actually has happened is mega companies have gone out and really dominated because they don't go super niche, but they create a vanilla layer that everybody kind of likes, and then they offer it to everybody in a way that's easy to find and access. And so while there has been some niching down, there's also been this like conglomerate win that people didn't really expect. And I guess this is a little bit of a convoluted question, but like when we think about business, often what's being projected back to us is like scale, growth. We want to be the biggest. We want to be the sexiest because that's where the status is.
Yeah.
And so like if you start a restaurant, you have to start a chain and it has to grow. And yet there's all these businesses out there that are lifestyle businesses or really nice businesses for the people who found them that are not scaling to that level. And I guess coming from both the big business world and the small business world, like how do you categorize those different types of businesses? And how do you think about maybe the different status hierarchies between the two or the different mindsets it takes to maybe be successful in one versus the other? Does that make sense? That's kind of a weird question.
I think, so let's talk about the scale businesses first. That's where I spend a ton of time. And when you're a scale business, you want every customer you can get. And to your analogy, you've got to create some more vanilla. You got to have stuff that kind of wings in the mainstream. And that's wonderful, but you still have to compete because there's other players out there who are also chasing almost the same vanilla.
Mm-hmm.
Those are really difficult businesses to be in because they're chasing down scale, cost, the next richness of vanilla or the next bit of features. But if they're really replaceable by somebody else in the ecosystem, they're constantly chasing some balance between cost and price. And that's a great mindset. It's great because it's good for the consumer because you're getting a lower cost, richer, but vanilla service choice. But what you'll find, and we can get onto a whole political dialogue on this, is what you'll find is at some point, the guys who are trying to super scale have beaten the other guys. They're the only ones. There's only one place that anybody in this country goes to go search for something on the internet. Well, guess what happens? That's literally a monopoly. And what happens is the innovations for those companies stop being about helping the consumer. They start being about driving up profitability. Right? So what you'll see, instead of getting the small business that you searched for by typing into search, you get 10 of their competitors from outside of town. And you go to the small business and say, hey, how come you don't show up in search? So yeah, I don't want to pay $7 per click for my own name because it's an extortion racket. Nobody has helped the customer in this world, right? So you have this mindset shift. There's one which I like about big and scale businesses. You're fighting really hard, tooth and nail, to get the right balance of value and cost for your customer. You care a ton about them. You're constantly trying to do something, anything small, to get more benefit to them. What I love about our free market economy, it's fantastic. But when you've beaten everybody else and now you're in a stratosphere above competition, you don't do that anymore. And you're not serving your customers, serving your shareholders. And that's been my kind of, I would break those two mindsets apart in the scaling businesses. And then in the smaller business, you can have similar mindsets. It can be totally right or totally wrong, depending on the context. But the mindset that I found, in fact, this is where my thesis, when I was looking at data and numbers, fell apart, is I was thinking I would expect to see guys who pursued the cost efficiency, price balance, feature development mindset relentlessly. I thought they would be the ones that survive. Instead, what you find is it's the customer orientation. It's the mission orientation. Because those are far more sturdy and stable than the next innovation or the next best thing or the next fad. And when you have a base of customers that's loyal, that you've had an indelible impact on, they'll stick around when you need them to, and then you'll look for more that look like them as you grow. It's different if you're really big and you're easily competed out based on features or pricing. Then that means really the way you win has to be about those relationships and people that you help and your mindsets and attitudes as a service company, right? Again, owner-led businesses, that trickles down if it's a good leader, right? It doesn't have to be a small business for that to work. But all of it comes down to what's your purpose or what's your philosophy. It actually does show up for the smaller businesses.
Yeah. I like your comment about as you start to win the game, it's a trap because you're like, great, I'm winning the game, but it doesn't stop there. Human beings we're not programmed to get to the end of something and go, great, that was it. Isn't this great? Yeah. I'm here. If we get a raise, it's not, oh, great, I made a raise. I don't ever need a raise again. This is great. I got this amount of money. No, the next year you want more. And where it's all comparative to where have we been and what are others doing? Like we're just comparing all the time, including to ourselves. And so as you start to grow and succeed and the competition gets smaller, like you get away from the customer. You can get away from the customer.
Yes, it's possible. And there's companies that haven't, but I think most of us can picture or know and deal with many of the companies that have, because they've just got the scale that nobody can compete with them. So they don't have to worry about purpose. They don't have to worry about delivering something particular of value because they're the only game in town.
Yeah.
But I think it doesn't last very long either.
Yeah. Then that creates the fertile soil for the next group to come in and disrupt them and pick them apart.
Yep.
Yes. Our success often creates the grounds for our own failure.
Yep. And then if you think of your success as making tons of money and being at scale, that's what will get you there. If you think about your success of the impact that you're having on people and the impact you're having in your community or on the planet, or just impact in terms of what you've created for your family or your personal satisfaction, then all of a sudden, nobody else is going to chase that away from you. So keeping those things in mind, that it is limiting though. You don't end up scaling. You say no to business. You say no to customers in a world where you actually care about purpose and impact. And then if you're in a world where you're saying no to the things that don't line up, somebody else who does come chasing after your space will take those ones. And they'll be different than you because they're going after some different looking customers.
Have you read Simon Sinek's The Infinite Game.
Yeah, he's been very influential on me in dealing with the small businesses, especially.
Yeah. And so I love Simon Sinek. I think he's great at what he does, but that book is also pretty much directly a ripoff of a 1970s book, Finite and Infinite Games, which is
Oh, really?
much harder to read. So I love what Simon Sinek did with it. But there is a philosophical book out there called Finite and Infinite Games too.
Oh.
And it more clearly defines what each one is a little bit and goes into very deep detail into the games.
It's more like the economist's view.
Yes. So I would suggest people start with Simon Sinek, not the original.
I like the economist. The game theory behind it is far more interesting than the leadership theory, at least for me, because I'm a wonk, I guess.
Yeah. So there you go. Anyone who's interested, whichever way you've been, there's the pop science version and then there's the deep economics version.
Yeah.
But I think they both apply to what you're talking about, which is the overall premise is, are we playing a game that has a specific endpoint and a clear winner and loser and finite rules? Or are we playing a game where the goal is to just keep playing the game? Yeah. And business really is a game you just want to keep playing.
Don't you see it in your own organization? I'm sure is we cut it up into quarterly, monthly, weekly games. Look, we can do daily and hourly games too in some settings. Right? I was at Costco earlier this week and I looked up on the board and they literally do have hourly games for the cash registers to pound through people. And how many guys did you get through this hour? Is there a bonus behind it? I don't know, but there's a game that people are playing every hour, every day. We do both. We need them. But
no, for sure. But I think business philosophy wise, remembering that the goal is to stay in business.
Yeah.
I think that's important to remember.
Yeah. And the goal is, who are you trying to make life better for? Because you're not, look, there are companies that are, or businesses that are purely about just finding arbitrage, right? Massive hedge funds that make tons of money that didn't particularly help anybody. They just found gaps in economic valuations, right? So those are legitimate businesses too. They don't need to read my book. But if you're in business to do anything of value, or if you're not just in it to line your pockets, then you have to keep that in mind as part of the long game philosophies. Are you still creating value? Are you still making people's lives better? And that changes over time too. Right? Yeah. Like you offered one thing, but now they don't need that as much, or they don't value it as much. So what do you change in what you're offering?
Yeah. Along the lines of purpose, how do you see small businesses that have a deeper purpose, even if it's not saving the whales, right? But they have some purpose. They're trying to serve some community. How do you see them making trade-offs between business and purpose? Because ultimately, no margin, no mission. You have to continue to be profitable. But like you said, they're willing to make trade-offs so that they can serve their customers and stay in business longer and have stronger retention and relationships. How do you see them making those decisions?
Yeah, I had an interesting conversation with a colleague about this recently. We were talking about how he's a very cynical, finance-oriented person. And he was like turning his nose up at one of the executives who had said, hey, we're doing this. Remember, we're really doing this to get more people into this opportunity. I won't get into the details of the company, but the executive leading the charge was really talking about purpose, very specifically talking about purpose. My cynical friend's like, look, somebody somewhere knows that this is really about making money. I'm like, it could be, but where the gaps are, they're appropriate. You've got a CFO somewhere. In this particular example, there is a CFO who has looked at the strategy and said, yes, getting people into that thing and doing this stuff is going to eventually result in money. And so we should support it, right? We should do it. But there isn't a person down below that executive leader who's sitting there saying, I'm going to move these people down this page. I'm going to encourage these people. And I'm not going to encourage these other people, because encourage these other people doesn't get me as much money as encouraging this one people. So where do you put those breakpoints? I think you do try and keep financial guidance up at the higher levels. And I think you do need to have some rigor behind, does this philosophy fund itself? But then you don't push controls down to the bottom from a financial perspective. You push the controls down to the bottom through a purpose perspective. What happens? Yeah, you have a bunch of marginally profitable decisions down at the bottom, but they drive much better delivery of impact. And on the whole, because you've done the work up at the top and looked at it and said, yeah, look, I'll take the averages. I'll make some money here. Not every one of my customers I'll make money off of. I'll be able to scale my organization, have lower costs to deliver that impact. The economics can work out. But you do need somebody in that leadership and in the decision-making to look at the finances to give you the guidance. But I would say if you're a purpose-driven company, you're not going down and giving people financial trade-offs at the lowest levels. And does that mean that you're a bad company if you do? No, but I've seen it work poorly in really big companies where they say, look, I know you're in the marketing group, but I want you to be fully worried about every drop of lifetime value and every drop of marketing ROI. I can see that. I'd be happy if I was a CFO of a tech company pushing people down that path. But then if you got product that's supposed to help people, and then you're like, yeah, but I'm not going to market to that group because it's not going to help them, or no, it's going to help them, but we're not going to make money off of them. You'll end up with companies like, who was as a fintech company that was supposed to help people's credit scores? But they would get these people, they work them, but if you work them too well, they leave you to go to somebody who's got cheaper product. So they actually would say they're doing these things, but then the people who are making the micro decisions on finance, they weren't intentionally avoiding helping people, but they were putting less effort, less money into the ones who would churn away, right? Because you don't have the marketing ROI of those individuals. And then they failed to deliver their purpose, which is they didn't graduate people out of the system. That's a messy spot to be in. I'm not going to take one side or the other, but these aren't easy decisions to pick a mission, pick a purpose, and then stick with it. But if you move your financial choices all the way down to the front line and drive people at the front line to think financially, not think purpose, they will.
Yeah. It's almost like if you're in business to help people with something that is a recurring need, then there's an incentive to keep customer focused. But if you're in business to help them with something one time, you got to be very careful if you're a customer dealing with those businesses, because the incentive is not, the financial incentive is not to help you quickly. And so you need to have leaders that have an altruistic incentive as well, because it's hard if you can't scale a business if all your customers, you're solving all the problems the right way.
Yeah, we have tons of cynicism around our pill culture, right? Because there's like pills that you could take on a regular basis that should solve the problem until you stop taking the pill. Right?
Yep.
Why couldn't we have developed something that you take it once? And to your point, there's financially, it doesn't work. And will people trust these companies who are one and done kind of offers, right? Yeah. It's really difficult to make happen. I think in each of these cases, you've got to have a mission, whatever that is that you want, which is if I want to make people healthy, I'm willing to go bring a cheaper product to market that I make less money on if it's going to help make people healthy, right? You've got to have that mission. Otherwise, you will end up acting like the pharmaceuticals are today, which is just maximizing their price over their 17-year window. And somebody way too high up has said, well, justified it because, yes, now I have more cash to put into research, except you don't put into research. You kick it back to shareholders, right? You've got to go and really deliver on it. And it could cost you. And it could and it should cost you returns if you're honest to your mission.
Yeah. All right. So we've talked about purpose. We've talked about position. Let's talk about proximity a little bit, because I was going to ask you, like, is it physical proximity? But what I heard you say is intimacy earlier. Yeah. And I liked that. Can you expand on what you mean by intimacy?
Yeah. I take the definition of intimacy from a book written by David Meister called The Trusted Advisor. He breaks down trust between two parties into an equation of credibility, reliability, intimacy, and then can divide it all by self-orientation. So if you're in a sales organization, building trust is really critical to closing a sale. Mm-hmm. Closing a sale, however, is really critical to your commission. And if it's obvious to the other party that you worry about your commission more than whatever their problems are, that self-orientation, that's at the bottom of the equation. The higher that number is, the lower your trust is. In my world, I call that commission breath. But there's a number of these concepts. Okay, credibility. Do you really know what you're talking about? It's pretty easy to define. Reliability. Do you show up? Are you there when I need you? Did you deliver the things the last time you said you would, et cetera? Intimacy, though, as defined, is some sense of shared knowledge of each other, But I'd break it down even more into shared vulnerability. I think in a lot of ways, people want to know that the person that they're dealing with and they trust bleeds like they do and is human. And this, by the way, goes into a much deeper conversation about where we're going with AI and technology in general. But people make decisions. If they knew that they were talking to an AI, they wouldn't trust the answer. Even though 9 times out of 10, the AI is probably going to be more right than the human. And in 10 times out of 10, both the human and the AI learned everything they did from the internet, which probably is half wrong. Whatever the case is, right? Trust is a very human thing. And we want to know that other person is human. So this intimacy, right? What I mean by that is being close to these customers, right? And having this proximity, it doesn't mean you have to see them every day, shake their hands every day, talk to them every day. What it does mean is that in your day-to-day decisions, their choices, their vulnerabilities, their needs are reflected in how you conduct your business. A really good example. I was going through all these counterintuitive results in my data. One of them was this: in California, my nail salons survived a lot longer or more frequently. What's it called? When we had the people separate, forgot the term already.
Social distancing. Yeah.
Yep. So when we had social distancing, you can't pack a nail salon filled with 30 people, at least down in California. So we had these social distancing rules. And so you couldn't fully utilize your site, your store, or your location, your retail location. But in Texas and Florida, they didn't have social distancing. So what did I expect? I expected the survival rate of hair salons, nail salons, et cetera, to be higher in those states than they were in California. What I found was actually the opposite. And I was like, wow, what's going on here? And so I found one in Florida that I talked to. Actually, there's 2 nail salons in the same kind of mall structure, one that had struggled and one that had survived. And the one that survived implemented social distancing on her own and wasn't going to go out and tell everybody about it because it was frowned upon. But she realized that her customers were nervous about coming in. She was more proactive in it, and she did a couple of things. She actually staffed down, right? She then implemented social distancing, and she had more than enough demand to keep herself fully occupied with the minimum staff. Down the way, they had a whole bunch of unhappy employees who there were a lot of cancellations. People weren't showing up, and they couldn't fill the store anyway. When it came down to it, I guess this woman said, look, I knew my customers. We don't just talk when we're getting their nails done. We talked like, how are they feeling about whatever's going on? And most of them had shared with her they were nervous about getting out and going to places like this. And so she made plans, and she was pretty close with them and knew what they were worried about. Can't speak for the other one who had gone out of business, but some business owners were like, let me keep it as open as possible so I can get as much business as I can because I'm struggling. Not thinking about, hey, why are my customers not coming in? Why would they be worried about coming in? And so they staffed up too much. They didn't manage their expenses the right way because they didn't set the table for themselves. In California, everybody had been forced to do the same thing. So they're all operating on the same aspect. So customers weren't sitting there saying, hey, I'm worried about this one versus that one. They're all doing the same thing. You still saw struggles, but you just didn't see as many as I had expected because, go figure, social distancing is what customer you wanted, or at least enough customers wanted to impact the guy who thought he could be full.
Yeah. It is amazing what that proximity, that connection to the customers, just making sure that you're asking what is going on in their world and really understanding the customer, the impact that has. I see that the business I work in has gotten very large in the time that I've worked. I mean, it was already a large business. It was a $600 million business when I joined in 2009, but it's a $4.5 billion business today. We have a ton of new offices. We've scaled all over the place. But I think one of the reasons that we have been successful is that the family that owns it's still a family-owned business, and they still talk about this. They talk about the founder who passed away in the early 2000s, but still his kind of ethos is in the business. And it's the people who know the customers best are the people who are working with the customers every day. And so the leaders of our business need to be the people who are talking to our customers. Yeah. The business is really decentralized, whereas every region is its own P&L, its own series of our business. And then the leaders of that series are the frontline salespeople who are out there talking not only to existing customers, but to new customers to understand what it is that they want. And a lot of the things that we do to innovate come directly from customer conversations. And so I've just seen that happen.
Yeah. It's such an important element of decision making, right? Again, I don't want to, I like CFOs. I need my CFO, good guy. But you don't want to just make decisions purely on the financials. They will reward you in the short-term game, right? The finite game, as you point out. But it's making sure your customers are happy will help you win the infinite game.
Yeah. So I interviewed a gentleman on here, a friend of mine named Neem Gandhi. And he was, I'm going to butcher this, Neem, pardon me, but he worked for the Mount Sinai Health System in New York. And he was, I think, their chief population health officer or something like that. Mm-hmm. And then they had turnover at the CFO level, and he wound up becoming the CFO. And he told a really interesting story about how he was used to going into these leadership team meetings, and they had a really close leadership team. And he would advocate based on what he believed was right for the customers that they were serving and how they treated population health and executed on their mission. But then he became the CFO, and he found himself saying those same positions and bracing for the pushback.
Yeah.
And nobody pushed back. And it actually, to his credit, it made him uncomfortable.
Yeah.
Because he was like, wait, I need that give and take. Somebody here needs to, I need to have my role, and I believe what I believe, but somebody needs to have the finance hat on and be pushing back on me. And he goes, oh, wait, that's me. That's my job now. Yeah. And so he had to transition. And even if he believed in the public health outcomes that his new public health person was promoting, it was his job to push back. Yeah. And just have that healthy challenge so that they could get to the best outcome. And I think there was such a good lesson of as leaders, we don't want to be on teams that are frictionless. We want to be on teams where there's good friction. We all are playing the roles, and then we can decide together where the right outcomes are.
They sharpen each other, right? You get the right answer from some amount of conflict and saying, hey, I want to go do this wonderful thing. And if you don't ask the question, wait, is that the right thing? Is that the best thing? Can we do it for cheaper? Can we do it bigger? I remember I had a mentor who, every time I came up with a number after analysis, he goes, why isn't it bigger? Right? I'm like, well, I'm going to give him an example, et cetera. Then why isn't it smaller? He asked both questions. And the first time he'd asked me, I just said, it could be bigger. Yeah. What about 10 or 10.5 million? And not 9. And what he told me later was, look, I don't know what number's going to be. I want to know that you've thought about it and that you can hold your ground on your answer. And if you haven't really thought through all the options, or you haven't really gotten a good reason why it can't be bigger, then obviously you haven't finished thinking about it.
Yeah.
If you think about that, you have a team that can create those tensions and has the different perspectives they can bring, you'll get a better answer every time.
Yeah.
You may not have the time for it. I think I can just hear tons of business owners and business leaders saying, I wish I had time for the debate and the sharpening of my hypothesis. I think one of the things that we talked about a while ago was going by gut. And how do you not go by gut if you don't have the time and you're a small business leader and you don't have a whole bunch of bright people, you can't afford a CFO, or worse, you're the owner, you're the head of sales and the CFO, right? How do you then get to the best answer that lines up? It's possible to sharpen your gut. You need to take the time away. You need to go ask what your gut decisions were, what you could have done better when you're not in the grip of making these decisions.
How do you do that yourself? How have you honed your ability to assess your own performance and sharpen your gut?
Good question. I have reflective time, and I do it frequently, and then I do it more periodically. But my simple reflective time is, how do I put it? So I've got 2 or 3 modes in work, right? First is I've got a big stack of things I got to go do. I got to prioritize, figure out what's important to work on, what can wait, whatever. Then the doing, right? And as a leader, you often find that you're not doing the things you put at the top of your priority list because there's other things that are urgent or people in front of you, all these things. And then the final chunk of time is also ideation time. How do I get creative? People around me refer it to starting fires, because if you spend a couple of hours at the beginning of the week, prioritize what you got to get done. You spend the rest of the week maybe getting this done, most likely fighting other fires, right? At the end of the week, you're exhausted from doing, but you probably still have some, or at least for me, I have some creativity left. And I want to go and make sure that I think about, hey, what are other things that I could add to my already too long of list to go drive. But each one of them, I have to go and like literally 2 out of 3, I have to go and set the time for. I have to carve the time out for the prioritization stuff. I have to carve the time out to be creative. And then more quarterly as a business, I like the reflective time. I sit down and say, okay, what have we done? What have we learned? What can we change? And then pretty much every time I have an opportunity to ask for feedback from people I'm working with, I got to ask it. Those are the kinds of things that will get me to improve on those decisions. But like when you think about business decisions and gut decisions, the quarterly for me is the best time to do it. I look back and say, what did I call? Could I have known more before making that decision? Did I wait too long to make that decision? Was it the right or wrong decision? Those are things that I'll ask about, sharpening my gut.
And where are you doing that? Are you writing that out? Do you have a file on your computer? You have a journal? Are you talking about it with partners in your business?
Alone time, handwritten, tossed in the trash eventually, but kept as to-dos until I've worked through them. So not like a journal, but at least handwritten. And then the business side of it's dialogued. And often they're coupled. So if it's business quarterly, it's hey, what do we do? But going in, I know what did I do? And I've already done my thoughts, and those are notes that I'll bring. But yeah, it's good. You got to take the reflective time. There's a number of places to be reflective, and personal and self-performance is definitely one.
Yeah. The reason I ask is I'm just such a believer that our thoughts are not clear until they're filtered, and they only get filtered when they come out of our head, either onto a page or out of our mouth, spoken to somebody else. And you can think that you've learned the lesson, but until you can actually articulate the lesson, you haven't learned it. Like our thoughts are really just loose feelings.
Yeah.
And they become tangible when we write them out. And I do a lot of writing with the coach that I work with. And I try to write every day. I'm probably 3 to 4 days a week, but that's really where you lock in the learning, is getting it out.
Yeah. For me, in the process of creating all the material that ended up in the book, it was every Saturday and Sunday morning writing for 2 hours at a time, just like getting my thoughts out. And yeah, round 1, 2, and 3 were just like word salad stories to figure out the point and figure out. Now is iteration after iteration. It took a while to really get the thoughts to actually mean something, but it was a very productive exercise to do it. It took me a really good distance in sharpening my thinking.
Yeah. I found this back in my 20s. I got into CrossFit and I ended up teaching CrossFit. And so I was working at a CrossFit gym, learning how to be a coach there. And I had some friends who were saying, can you write me workouts? Can you help me with my workouts? And so I had all these spreadsheets going around. And finally I was like, this is too much. I'm going to just start a WordPress blog, and I will put 4 workouts a week on there. I'll put the programming. Anyone can do it if they want to do it. And I had friends who were doing it. And then I like writing. And so I just started writing little thoughts to start the week on something I was learning, something I'd experienced with a client at the gym, something I was working on or struggling with in my own life. And what I found was I wound up doing that for 5 years every Sunday. And the clarity of my thinking improved so much. The retention of the knowledge that I was learning improved so much. Yeah. My ability to communicate got sharper. Like it just, that forcing function of I have to put out something that I've learned this week. Yeah. Just answering that one question, what have I learned this week? It was such an incredible lesson. It just started by accident, but it really taught me like how to lock in the learnings, and not only lock them in, but just like really enhance my abilities and my gut to a lot of ways.
Yeah, I think that's right. I write a ton now for work too, memos and drafts. So much more so than when I was running something smaller and could do it through verbal communication. And yeah, just the act of doing it and more frequently doing it really sharpens you. I also cheat now too. I use AI to go and take a bunch
How
of
dare you?
Yeah, no. I didn't, it wasn't around when I was writing the book, but it's around now. And I read a whole bunch of like unstructured notes and said, hey, spit back to me what I said, like in a more structured way. And it never does it right, but it gets me like, it's my first round of edits every time. Yeah. And that saves me, and that actually forces me to think, if the AI didn't understand me, I clearly didn't communicate very well. If the AI didn't get my points, then I definitely need to do better about my own thinking.
Yeah. I have a friend who journals into ChatGPT. And
Oh,
so
interesting.
he'll just put his journaling in a chat there. And then at the end, he'll just give it some prompts of what are the themes over the last week that you've been noticing? What are the themes over the last 6 weeks that you've been noticing?
All right.
If you were going to push back on this thinking at all, where would you challenge my thinking? Where help me see this from a different perspective? And he'll just start to prompt it with some questions like that, just to help challenge and pressure test his own thinking in there. And then he'll be like, oh, that's really good. And he'll just keep writing and interacting with it. And he's had a lot of success using that to refine his own thinking.
That's cool. That sounds great. Yeah.
Yeah. Except that now the internet knows everything about his deepest, darkest secrets.
Yeah.
So,
If he pays for the really expensive ChatGPT, then he gets his own little safe box. But yeah.
so they say, what's the Skynet
Yeah.
from
Skynet's going to
Terminator?
know.
Skynet's going to know. Yeah.
Skynet's going to kill us. It's not going to be nuclear bombs. It's going to be like pacifiers that we don't even realize.
Yeah.
We're all on the phone thinking that everything is normal. In reality, it's already taken over.
Yeah. All right. Before we turn this into a dystopian podcast, for folks out there who are not operating in small businesses, but see the wisdom in a longer term game and in the humanness of what you're talking about, like what are the best ways that you've seen organizations scale purpose, proximity, and or position, keeping the essence of that?
So it's easy when you're a single business owner, right? Because you've got, I call them principles because if you really know them in your heart, then your decisions don't require a ton of logic. You can make decisions from your gut because these three principles form the basis of why you're going to make a choice one way or another. For a large organization, role modeling these principles and sharing and celebrating them is really important. Sometimes people call them values. Values are often, I don't want to say often, I've been in many corporations where they came up with values because they sounded good, but they didn't really land and they don't drive decision-making. These principles need to drive decision-making. There's a handful of exercises you should do as a business leader in a large business or a small business around who are the customers you really serve and why are you the best option for them, knowing that's positioning. It's easy if you're thinking about the marketing materials that have been written for you. It's a lot harder if you were to really put yourself in the, is there a customer who doesn't fit and a customer who does fit, right? And what is that line? Knowing that's really important. And you knowing that and you being aligned on that with others and exploring and testing the boundaries of these kinds of questions with people to role modeling around, here's the decision. And I made the decision because this is the kind of customer we want. This is the kind of customer it's nice to have, but they're not our core focus. That's really important. And it's not going to be hey, it's because this guy made us X dollars of LTV and that guy didn't, right? So it's really about who and why, not the how much. And then along with that is the proximity lessons. Now, proximity is so hard to replicate and do well in a big business. And empathy is not a skill that everybody in the company has or shares equally, nor are their experiences with customers. So here's where, which is a bigger company, I think you have to model those customers. And what I like, I've been in a few places that do this, is if they know their consumer, like they'll have posters of a picture of the consumer with their thoughts and what they care about. It's because you want that consistency in people's minds. What is it that our customers care about? So talking about it a lot more, celebrating it, putting it up on the walls as posters, sending out the stories from the customer's perspective. These things foster a common sense and common principle for what you care about in your customer. And then the purpose is really also important. You celebrate purpose, you don't celebrate financial success in a big business or small business. If you have all three of these, right, if you're doing them, it's a lot harder to scale the three pillars in a big business. It's not impossible, right? And it doesn't have to be just because the founder said so. Oftentimes, if there's a real good intimacy in the company, founder said so is good enough for a lot of people.
Yeah.
But understanding kind of a deep sense of agreement with those things is really where you can then make decisions much more quickly and consistently and comfortably as a team, because now you all know those underlying principles, you'll share them. So going off and doing something without going and rounding up 12 people and having 3 meetings about it is possible when you trust that your team understands the reasons you're making these choices.
Yeah. I love that. I think of Seth Godin. I've heard him say a lot and write a lot. People like us do things like this. And I think just the more that a group clearly defines that, hey, this is what it means to work at XYZ. People like us do things like this. I think that you get that buy-in then, and that creates that intimacy of, yeah, no, this is just how we behave. Like you said, it's just preloaded with, no, these are the values. This is the foundation that we jump off of. And so therefore, when a situation comes up, I just know how I'm going to behave.
Yeah, when I was at McKinsey, we would celebrate the McKinsey values once a year. And I don't know that we did a great job of it in the annual celebration. We talk about it and talk about what they meant, et cetera. One of my favorites was this obligation to dissent. It's very common. People may have heard of it. You always have to make sure that your opinion's heard. You may not be listened to, or you may not be agreed with, but you've got to at least point out where the flaw in logic could be. But a lot of them are hard to explore and describe and get people to understand. So that's why the storytelling and the narrative and the role modeling is really important. Because if you don't say exactly what you said with Seth, right? This is how people like us make this decision. Highlighting these values in the decisions that you make or in the choices that you made as a business leader or just celebrating somebody making the right choice for the right reasons in a different level, right? It's pretty important. It's pretty valuable. What it does is it takes time out of your day in the short term, but it saves you from engaging in the dialogue around easy decisions or decisions that you think should be easy. So, right? Your team can do them if they understand the values behind it.
Yeah. Sri, this has been a really fun conversation. We took a couple of detours I didn't see coming, but I've enjoyed all of them. And it's really fun to pick your brain and learn the lessons that you have learned from all the great work you're doing with small businesses. And as I've said ad nauseum on this podcast, and I said it at the beginning, like, lessons in humanity are lessons you can apply everywhere. Like, the things that make a customer feel good from a small business are still going to make them feel good if you're a large business. You just got to think about how you deliver them differently. And I love the lessons from this. I encourage people, if you like this conversation, this is just a snippet of what is in the book, Unconventional, a small business strategy guide. Would encourage people to go out and buy that. Anything else you want to say before we sign off?
Hey, thanks. It's been great having a conversation with you. I appreciate you having me on. Look forward to chatting more down the road.
All right. Good luck out there, everybody.
Hey folks, one last thing before you go. If you enjoyed the episode, make sure to hit subscribe so you can stay up to date with future guests. That's it. Thanks for coming. Go make the most of your business and the people in it.